ニュースを読みます。Financial stock fall as Trump's credit card rate cap plan rattled investors by Nikkei Nishant and Utash Shetty, January 13, 2026. U.S. financial stocks and UK-listed lenders fell on Monday as President Donald Trump's call for one-year caps on the credit card interest rate threatened a key revenue stream for the industry. The move deepened concern over the sectors as the investor grapple with the interest rate uncertainty and will likely dull the potential benefit from a shift toward value stock. Trump on Friday called for a 10% cap on the interest rate on credit card starting January 20 without providing details on how he planned to make the company compliant. Shares of JP Morgan Chase and Bank of America, the top two U.S. lenders, dropped 2.5% and 1.6% respectively in early trading. Citigroup fell 3.7%, while Wells Fargo declined 1.5%. Wall Street analysts, however, expressed skepticism about the cap going into effect, noting that such a measure could only be enacted by Congress with passage unlikely. It would take an act of Congress for such a rate cap to be in place, given the overwhelming legal challenges an executive order would likely face, analysts at UBS Global wrote in a note. British bank Barclays shares touched their lowest in nearly a month and were less down 2.2%. Shares of U.S. consumer finance firms such as Synchrony Financial, Bread Financial, and Capital One fell between 8% and 11%. American Express tumbled 3.8%, while payment processors and MasterCard slipped 1.8% each. Risk to credit access. Trump's announcement is seen as an attempt to rein in concern over the cost of living in what is the revival of his presidential campaign pledge. It is not surprising to see Trump revisit the idea as the affordability has become a top concern among the U.S. voting bases. Seaport research analyst Bill Ryan wrote. However, analysts said the move could backfire as lenders would be forced to slash limits or close accounts of borrowers with a lower credit score. This rate cap would not address the root of the problem and could push the consumer toward more expensive debt. It could push more borrowing away from the bank into the other unsecured loans such as pawn shops and other non-bank consumer lenders. JP Morgan analyst Vivek Joneya wrote in a note. Costly credit card loans. Credit cards are typically seen as one of the costliest forms of credit. Lenders often cite their unsecured nature with no collateral as a major reason for the high rate, since they face greater risk if borrowers default. The average interest rate on the credit card on November stood at 20.97%, according to the Federal Reserve Consumer Credit Report released last week. Investors will closely scrutinize commentary from bank executives as the industry kicked off the fourth quarter earnings season this week. JP Morgan is set to report results on Tuesday, followed by Bank of America, Citibank, and Wells Fargo later in the week. 以上です。